Hello everyone, welcome back to the weekly recording. So as usual, we are going to take a look at how the indices has performed for the past 1 week and then the outlook for the upcoming week. Unfortunately, the market indulged in a selling spree as the Fed projected higher interest rates from 3.5%, it raised to 4.6%. So before the FOMC started, the market had a small rebound. But unfortunately, later you'll take a look at the chart. It did not manage to clear key levels. Then after Powell speak, the market sell all the way down, breaking 52 weeks low for the Dow and etc. So we are going to take a look at the performance chart now and see how the past week, how the indices had performed. So here we have the Dow down by negative 4.0, the blue line over here. Okay, then we have S&P 500 down about 4.6%, the red line here. And then we have Nasdaq, the worst performing index, down 5%. And then we have STI, the best performing index with a negative 1.2%, but nothing to cheer about because there are more bearishness looking. And then we have Hang Seng continue its sell off 4.4%. So I have a comment from one of the viewers, a very good viewer who has been supporting me. So he was anticipating a level which is lower than 18K for Hang Seng, and yeah, he's correct. Hang Seng had no chance to rebound for now. Okay, so let's take a look at the chart and see what happened. So let's start off with the Dow. You can see from my drawing over here, I anticipated a downtrend. So as you can see, we had a small rebound over here on this white candle, but of course it did not go to the high that I drew last week. I drew last week where we see that the Dow failed to clear its previous support level, which now turned to resistance at 31,048, and then it broke its support, which I anticipate it will hit, but it exceeded my expectation by breaking this support level at 30,139 thereabouts, and then now it is below its key support level, which is its 52-week low at 29,650. So it's below that already to a new 52-week low. Okay, so there is no sign of rebound as yet. So we are going to hope that there will be more signs that can tell us that the Dow can rebound in the next few days. The best is Monday or Tuesday. So there will be a slew of market data that are going to be announced next week. So we are going to take a look what are they later on. Now, S&P 500, we have it breaking its key support level at 3,720. So one of the key support level. Why? Because this is a major support level. You can see here, tested once, tested twice, and it was broken. So meaning to say, the next key support level will now rest at 3,635. If broken, then we'll go for a 52-week. If break, it will be going for a 52-week low. As you can see, there is no low after this level until we have this at 3,539. So this 3,635 is actually a major support level. As you can see here, let's zoom in here. We got it tested twice. So it turned out to be a very good support in the month of June, when we had a major sell-off after the FOMC as well, and of course the CPI data. So then we have this going to be our key support level to watch next week. Nasdaq we see a hammer closing on Friday, but we need some form of confirmation for rebound. But the good thing here is this hammer is at the support level. So we have this support level 10,854 that it had managed to hold on to. After breaking it during the intraday, it managed to close at the level. So it's very crucial for it to get a so-called white candle confirmation, though white candle confirmation may not be able to help, right? Okay, for it to go up, but then at least it gives a ray of hope. Now, why the white candle confirmation for Dow, S&P 500 and Nasdaq here did not work? So if I were to go back, you see S&P 500, see the hammer, white candle confirmation, then this Dow white candle confirmation. You can see very clearly that Dow and Nasdaq did not manage to break their key level, which is for Nasdaq 11,537. Dow I mentioned earlier. And most importantly is the FOMC week. Yeah. So it's very tricky because it depends on how hawkish the Fed is. We know that they are going to increase interest rate, but we don't know how far they're going to go to. So they are going to extend to 4.6%, which is a very, very high level, especially for those who who take a housing loan, 1 million housing loan. You are looking at 1.6% interest right now, but then if next year you're going to refinance or reprice your loan, you are facing close to 4% or 4.6% interest. So how does it translate to you? So now let's say you're paying 1 million loan, 16,000 per year, become 46,000 per year. So this is going to be a simple calculation, just for example, just to tell you that you are looking at a very, very big expenses ahead. Okay, so it's going to be a tough 2023, because with the projection means that the interest rate is going to go beyond 2022. The interest rate hike is going to go beyond 2022, and then if the interest rather inflation doesn't come down, then we have recessions, incoming recessions very, very soon. Now, Asian market STI, although it is the best performing index, only down by 1.2%, but you can see STI broke its key support level, which I've drawn over here, 3,041. So it has broken, and then I've drawn to here, which is roughly around this major support level, okay, at about 3,200. This is the key support level for STI. Now we can see the sign of a downtrend, as you can see, lower high, and then we have lower low over here. So this is going to be a tricky sign for the index. No doubt, we held very well throughout the week, resisting every crash from the US market, and then hold above the support level at 3,241. But we finally give way on Friday. So will we go down straight away to 3,201? This may be possible next week. If we break this level, then we will have another level to look out for, which is here, 3,155. Okay, so next support level. Next, Hang Seng. Hang Seng, I would say is quite hopeless for now. As you can see, I have drawn my downtrend, and I thought it might rebound slightly higher, but it's still like the Dow couldn't break its key resistance level or key level. So the key level to break was 18,796, but it went up trying to go above, but then close over. So it tells you very clearly what are the intention of the market. Basically, they have no strength to go up. So it is right now below 18,000, and where is the next support level? This is multiple year low, 52-week low as well. So Hang Seng is going to face a potential downward movement to push towards 17,807 or below, which is around 17,638. Okay, so next week we have to look out for certain signs. So there are more economic inflation data that's going to come out. Okay, so wrapping up, what are we expecting next week? Okay, so starting with the Monday, we have Hang Seng going for some export-import data, but then really help the market to recover if there is some improve in data, because they have already removed the quarantine, mandatory quarantine law. So it's likely to help going forward, but the market seems like it doesn't have the strength to continue higher or have the strength to buy up because of the underlying bearishness are still there. Then we have some Fed members speaking. So we have the US Fed Mr. and Rosengren speaking on Monday. Then China has their own industrial profit. Then Powell speak again. So every time when you speak, market sell off. So Tuesday, will the market sell off or continue or rebound? Then we have the PCE data next week. So new home sales. Okay, before PCE, we have new home sales. So the recent CPI data, our core CPI rebounded due to higher housing price, or the amount that you need to pay to stay in US has gone up. So the rental rate has gone up. But then we must take note, it is lagging. These informations are lagging, which reflect in August. So whether September has came down or not, we don't know. But that's why the markets are looking at the Fed, because they probably have some advanced data to analyze. So we have Powell, Bullock speaking, and then we have the PCI data, the GDP data. So all these are some of the key information that the market may be looking towards to. So this PCE data is one of the inflation numbers that they look at. So if it start to drop, market may have some chance to rebound next week. Then GDP is likely to be down. Then yeah, so Thursday and Friday PCE data are very key. So good luck to us next week. If you have shorted the market, well, I think you might be looking at, probably the hopefully the TC data is rebounding. If not, for most of us who are looking at the market to rebound, then yeah, we hope that PCE data come down. Okay, I'll see you next week. Yeah, goodbye.